Everywhere you turn, the whispers are there, growing louder each day. Online forums buzz with speculation, news headlines scream of impending doom, and even politicians are weighing in on the matter, fueling the uncertainty. The core of the concern, the US dollar, the world's reserve currency, is supposedly teetering on the brink of a catastrophic collapse. The story, as it's often told, is nothing short of dramatic, filled with hyperbole and worst-case scenarios. The dollar crashes, taking your hard-earned savings with it, leaving financial ruin in its wake. The very fabric of the American way of life unravels, leaving behind a landscape of foreclosures and shattered dreams. This narrative, carefully crafted and widely disseminated, preys on our deepest fears of economic chaos, societal breakdown, and the loss of America's global prestige. It paints a picture of a future nobody wants to see. But is this widespread panic truly justified, or is it simply another case of overblown hype, amplified by social media and sensationalist reporting? There's no denying that the world is undergoing a period of significant change, and the United States faces a unique set of challenges, particularly from rapidly rising economic powers like China. The U.S. national debt continues to balloon, reaching unprecedented levels, fueling legitimate concerns about the long-term stability and future value of the dollar. The concept of de-dollarization, once relegated to the fringes of economic discussion, is no longer a far-fetched idea. It's now a topic of serious conversation and strategic planning in Beijing, Moscow, and even within the halls of power in Brussels. Across the globe, countries are actively exploring and implementing strategies to reduce their reliance on the US dollar in international trade and finance. Many nations are growing increasingly wary of the potential for US sanctions and the overwhelming financial power wielded by Washington. This represents a real and significant strategic shift in the global order, a move towards a more multipolar financial landscape. However, it's crucial to understand that the dollar isn't about to crash and burn overnight, despite what some may claim. The global financial system is far too deeply intertwined and complex to allow for such a sudden and catastrophic event. Still, the dollar's long-held dominance is undoubtedly being challenged on multiple fronts, and its influence will likely erode gradually over time, as alternative currencies and financial systems gain traction. The truth, as always, is far more nuanced and complex than the sensational headlines suggest. The dollar's role in the global economy is evolving and transforming, but it's not on the verge of vanishing completely. Developing a clear understanding of these gradual shifts and underlying trends is absolutely key to making informed decisions and preparing effectively for the financial future that lies ahead. We need to be vigilant in separating sensationalist predictions and fear-mongering from the real, slow-moving and often subtle trends that are shaping the global financial landscape. So, let's dig deeper and take a closer look at what's really happening with the dollar, separating fact from fiction and hype from reality. To truly understand the future trajectory of the US dollar and its continued influence on the global stage, we must first delve into and understand the very foundations upon which its power is built. These aren't just economic factors, they're the cornerstones of its enduring strength. First, and perhaps most critically, is American innovation. The United States maintains a commanding lead in technology and entrepreneurship, fostering a culture of creativity and disruption that fuels economic growth. This is exemplified by companies like Apple and Google, which are not just commercial giants but also technological pioneers, constantly shaping the world we live in through their innovations. Furthermore, a vast amount of global commerce is priced and transacted in dollars, solidifying its role as the primary currency for international trade. Second, we have U.S. military power. The dollar's stability and global acceptance are undeniably backed by the world's strongest military, projecting power and influence across the globe. This military strength secures vital global trade routes, ensuring the smooth flow of goods and services, and ultimately underpinning trust and confidence in the U.S. currency. Third, and perhaps most subtly powerful, is the network effect. The dollar has become and remains the world's primary reserve currency, a position of immense privilege and influence. It is used in the vast majority of global trade transactions, and is held as a primary reserve asset by central banks in virtually every corner of the globe. This creates a powerful self-reinforcing loop, a cycle of dependency and entrenchment. Essentially, everyone uses the dollar because, quite simply, everyone else does, creating a powerful inertia that is difficult to overcome. The entire global legal and financial infrastructure has been meticulously built around the dollar, making any significant shift or change incredibly difficult and complex. These three pillars, economic dynamism fueled by innovation, unparalleled military might projecting global influence, and deeply entrenched network effects within the global financial system, collectively contribute to making the dollar remarkably resilient in the face of emerging challenges. Any potential challenger seeking to displace the dollar must overcome decades of deeply entrenched systems, established trust, and widespread global acceptance. While cracks and vulnerabilities may be appearing in the dollar's armor, the underlying structure remains incredibly formidable and difficult to dismantle. The dollar's dominance wasn't built overnight, it was carefully constructed and solidified over generations, meaning it won't simply disappear or be replaced in a short period. The reality is that replacing the dollar represents a monumental and historic challenge, requiring a fundamental shift in global economic and political power. The world may be undergoing significant shifts and transformations, but the dollar's underlying foundation remains remarkably strong and deeply rooted. So with that in mind, let's delve deeper and examine how potential rivals are attempting to chip away at the dollar's dominance and what challenges they face. For China and Russia, dollar dominance is a tool of US power and a vulnerability for them. US sanctions have pushed them to build an alternative financial system, aiming to bypass the dollar. They're reducing dollar reserves, increasing gold holdings, and trading in their own currencies. BRICS and other forums are part of this coordinated push, but creating a true alternative is tough. Global currencies need open markets, free capital flow, and above all, trust. The yuan and ruble aren't fully convertible, and both countries maintain strict capital controls. Investors are wary there's no guarantee of free movement or protection from political interference. The rule of law is weak compared to the US, and trust is lacking. This trust deficit is the biggest obstacle to their de-dollarization ambitions. For now, the dollar's institutional strength keeps it ahead. Central banks, particularly those in developing countries and nations that are considered US rivals, are making a significant move in the global financial landscape. They are strategically buying gold at record levels, accumulating reserves at a pace not seen in recent history. This surge in gold acquisition is more than just a passing trend. This isn't random or coincidental, it's a deliberate and carefully planned strategic move, reflecting a shift in how these nations view their financial security and independence. A primary motivation behind this gold-buying spree is to reduce their reliance on the US dollar, which has long been the world's dominant reserve currency. Gold, unlike digital assets or currencies controlled by specific nations, is a physical asset with no counterparty risk. It exists independently. It serves as a reliable hedge against both economic and political uncertainty, offering a safe haven during times of global instability and market volatility. Central banks are increasingly worried about the growing US national debt, persistent inflation, and the potential risk of economic sanctions that could lead to their dollar reserves being frozen or otherwise restricted. Gold offers diversification, acting as a counterbalance to other assets in their portfolios. It also provides a measure of monetary independence, allowing these nations greater control over their financial destinies. While gold holdings are still significantly smaller than dollar reserves in most central banks, the upward trend in gold accumulation is clear and unmistakable. The world is slowly but surely moving toward a more diversified multipolar monetary system, where the dominance of any single currency is diminished. However, it's important to acknowledge that gold can't replace the dollar overnight. There simply isn't enough gold available to meet global demand, and the necessary financial infrastructure to support a gold-backed system isn't yet fully developed. Still, the ongoing gold rush signals a significant shift in confidence, reflecting a growing unease with the existing financial order. It's a quiet but powerful vote for a future that is less centered on the dollar and more reliant on a diverse range of assets and currencies. Ultimately, the move to gold is a telling sign of changing times, indicating a potential reshaping of the global financial landscape. A currency's value reflects economic strength, government policy, and global trust. Productivity is key. Countries that innovate and export are rewarded with strong currencies. Central bank decisions like interest rates drive capital flows and currency demand. Liquidity matters. The US Treasury market is the world's deepest, making the dollar the go-to for global trade. Trust is the foundation. People need to believe their assets are safe and stable. The US, despite its flaws, still offers unmatched institutional trust. No other country matches the dollar's combination of innovation, liquidity, and legal stability. That's why the dollar remains the world's reserve currency. But as trust erodes, the system could slowly shift. After World War II, the Bretton Woods system made the US dollar the world's reserve currency, pegged to gold. Other currencies were fixed to the dollar, creating global stability. But by the late 1960s, US spending outpaced gold reserves, and countries demanded gold for their dollars. In 1971, Nixon ended dollar-gold convertibility, launching the era of floating exchange rates. Many predicted the dollar's fall, but instead, its dominance grew. The dollar became central to global trade, especially oil, the petrodollar era. The system shifted from gold-backed to trust-backed. The dollar's strength now rests on the US economy and global confidence. This legacy still shapes the world today. China wants the yuan to rival the dollar, reducing its vulnerability to US sanctions and boosting its global status. Beijing promotes the yuan in trade and finance, especially with Belt and Road partners. The US responds by reinforcing its own economic and financial strengths. But China faces big hurdles. The yuan isn't fully convertible, and capital controls deter investors. The impossible trinity means China can't have a fixed rate, free capital flow, and independent policy all at once. Deep debt, an aging population, and tight political control also hold the yuan back. For the yuan to become a true reserve currency, China would need major reforms, opening markets and loosening party control. For now, China wants global prestige without the risky changes. This contradiction limits the yuan's rise. The dollar isn't headed for a sudden collapse, the global system is too dependent on it. A crash would trigger worldwide chaos, hurting everyone, even US rivals. Instead, expect a slow erosion of dollar dominance as the world moves toward a multipolar currency system. The dollar will remain central but share the stage with the euro, yuan, and others. Regional trade in local currencies will gradually reduce the dollar's share. This shift is driven by long-term trends, US debt sanctions, and the rise of Asia. The process will take decades, not months. The dollar will go from global monarch to first among equals. The key is to understand and adapt to this transition. The era of unquestioned dollar hegemony is ending. Prepare for a more complex world. With the dollar's dominance slowly eroding, how should you protect your wealth? Don't panic or go all in on any one asset. Diversification is key. Like central banks, consider hard assets, real estate, gold, and for the risk-tolerant, digital assets like Bitcoin. Gold remains a classic hedge against currency risk and inflation. Bitcoin, though volatile, offers a decentralized alternative with a fixed supply. The most important investment is in your own knowledge. Stay informed about global trends and adapt your strategy as the world changes. Read widely, seek diverse perspectives, and be ready to adjust. The future will reward those who are prepared, not those who are fearful. In a shifting world, informed action is your best defense. If you enjoyed this video, please like and subscribe to Express Econ Geofinance Insights for more content like this. Let us know your thoughts in the comments below.